Hey everyone, John Henry here, Slingshot Futures Trading Group. Thanks for joining me in today's video. Before we start, take a second to give the video a like, subscribe to the channel, and make sure to click the notification bell icon so you don't miss our next live stream or next video launch here on YouTube every day. Make sure you start your day off the right way. Don't forget your free morning brief that's waiting for you at ssftg.com/brief. In the top left, you can click on morning brief to jump into that. That's where you'll find all of our major DP levels right up here at the top, as well as a quick technical overview for the major 6 markets that we look at: the NASDAQ, the S&P, you've got gold, crude oil, the euro, as well as Bitcoin. Maybe you're looking to get a full game plan for the day, week, or month. Check out the join button below. Level 1 subs get a brand new members only video every single morning going over the major 6 markets and a game plan for the day. In addition to that, once a week I launch a weekly brief, and of course once a month we have our monthly brief as well. Of course, all members gain access to our private Discord chat server, and if you really want to get into the nitty-gritty, check out the live analysis room for level 2 subs, where you can see my screens in real time during the New York Stock Exchange Open. You can ask questions and interact with the other members, as well as bounce ideas off myself and everyone else. It's a fantastic environment, and I would love to see you in there. All right, and now on to the really fun stuff, the topic for today. The first 5 volume node. Now, if you're familiar with some of the other things that we've done with volume, like the volume void pockets or VVPs, volume in general, especially at specific locations, can give you a huge amount of information to utilize. Now, obviously, this is a market observation and a level of interest that can really narrow in and utilize, in this case, the order flow volume profile tool within NinjaTrader. Or if you have an equivalent tool or an indicator on another platform. But either way, you are going to have to be able to utilize the order flow volume profile indicator. And what we're looking at here is the first 5-minute candle, and we're going to zoom in really close here. And what we're looking at is the first 5-minute bar that forms on an RTH session. Now, if you're not familiar, RTH stands for regular trading hours. And RTH session, that's at 9:30 Eastern time. Now, what we can utilize is when we have these volume nodes, when we're talking about volume void pockets, we're talking about a lack of volume. In this case, we're looking at it on the opposite side. In the first 5-minute candle, where did the majority of the volume come in? And we're looking for anything that stands out as a peak. I don't necessarily care about this little guy right here, but it's got to be pretty prominent. Something like this stands out pretty aggressively, and something like this one, obviously, that's the POC, that stands out as well. So those are the zones of interest that we really want to narrow in on. So here on this first 5-minute bar, we have a very nice volume pop in 2 different locations. And these areas, specifically for this day at least, can be very big zones of interest if we draw them forward and allow the market to create a few things of interest that happen around there. Now, one thing you'll notice, first off, we're not going to be able to utilize it on the first candle, obviously, because that's when it's forming. The second candle typically isn't going to be very useful either, and even the third. We want this to happen a little bit later. But when the market comes back to those zones of high volume, that's where things get very interesting. Now, it's not always as picture perfect as this. Like, we have a beautiful rejection off of that ended up being a great drop. Another beautiful rejection that ended up being a great drop. And even after these levels broke, they act as support or resistance on the other side. So they're phenomenal areas of interest to keep your eyes on. But realistically, I only look at them at the beginning of the day. And even if the smallest candle shows up, it can still be a lot of really good information. Here is an example. This is a gigantic chunk of volume at the top, so that one's going to stand out as interesting. Now, bar 2, not going to help a whole lot. Bar 3 is starting to break away from it, and then buyers will be looking for the market to come back to that zone. In this case, buyers were so aggressive they didn't even allow it to come back for the rest of the day. So that would be one of those instances where it never came back. That happens too. If we go back to the next example, the next day before that, and we're just looking at the volume on the first 5-minute bar, nothing else. And we're noticing any big zones that stand out. Right there is obviously a big chunk in volume. And here, a couple very interesting things happened. We had the breakdown, and the market came back. And there was no big rejection here. It just kind of chopped its way through. And from a psychological standpoint, if sellers are expecting to see a response here and then it doesn't and pops back above, you can see what this next candle is. This is all of those sellers getting out of break even, and that allows the market to potentially try to drive a little bit further up. So it creates these really, really big pivot point areas of interest for the day that can sometimes be applicable for the entire day. Here's another one, the next day back. If we go back and look at this one, we can see what happened here on the first 5. We'll load up the volume on that first 5. There is a giant chunk of volume right there, and maybe a smaller secondary one, but realistically, the big chunk of volume there is going to be at 38.60, and it doesn't look like the market ever came back. So that was another one of those examples where it made that volume, and that ended up being the high of day. Here's another one. We'll look at this one here. And again, just going over all of these different examples to show you how incredibly reliable these levels are, even as short-term levels of support or resistance. Buyers, again, on bar 2, bar 3, that doesn't prove a whole lot. But when the market broke away from it, guess where it came back to? Beautiful resistance. Oh, and it broke above it? Guess where it came back to? Oh, beautiful support. It's crazy how often these things work. Now, it's not necessarily just stuck on the first 5-minute candle. You can be utilizing the first 15, the first hour, that initial balance. Those zones can be very interesting, but keep in mind, if you're looking at it in an RTH perspective, the first 60-minute candle, that might not give you a whole lot to work with, realistically speaking, because, well, you've only got a few more hour candles left before you run out of time. So keep that in mind when you're looking at them. Generally, I like the first 5, maybe the first 15 would be okay, but if you start going beyond that, it starts becoming a little bit less useful, not because the zones are less interesting, you just have less candles to work with. So here would be one more really good example to kind of end on, where sometimes it doesn't necessarily always paint the cleanest of pictures, right? Welcome to the markets. Nothing is ever perfect. And this would be a good example where it creates several levels. This is a 15-minute chart. We've got a major zone right there, another one that kind of stands out there. We've got another one that stands out there, and another one that stands out there. So obviously, when you've got all of these different levels, it sort of becomes just the first 15-minute bar at this point. I mean, it's the whole thing. But you can see on these interim little zones of interest, there were a lot of nice little bounces that can still show up as zones of potential opportunity. It's just keep in mind, when it gets a little bit choppy like this, don't expect it to work out flawlessly, because that's just not the case. When it's not clear, you expect it to be, well, kind of muddy, as you would expect just anything not clear to be. All right, well, that's going to do it for this one. Hopefully you found it useful, interesting, entertaining, maybe something new that you haven't even considered looking at that you can add to your trading tool belt. As always, if you have any questions, feel free to send me an email, jhb@ssftg.com. And like we always say, stay safe out there, keep those stops in play, and let the winners run. Until the next time, we'll see y'all then. Thanks.